Exchange traded funds are slowly but steadily gaining grounds in India. Check out this new video to know more about ETFs. Planning to invest in an ETF? These are the 5 things that you should keep in mind before you think of investing. ETFs, as the name suggests, are exchange traded funds. They are a passive investment vehicle. What does that mean? Now, passive investment vehicle means a fund which is not actively managed by the fund manager. The fund manager does not take active decisions as to the portfolio allocation of the funds in that particular mutual fund. So, ETFs are passively managed funds. The first point that you should know before investing in an ETF is a basket of securities. So, you have 2, 3, 4, 5 different kinds of securities that a ETF can invest in. What they do is they track an underlying index, like say a Nifty or a Sensex or a particular sectoral index, like say an auto index or a banking index. Second point, ETFs can be traded like shares on a stock exchange. This is not like a mutual fund. In a mutual fund, what happens is you can trade only once in a day after the trading hours of the stock exchange. But in case of an ETF, what you can do is you can buy and sell those ETFs during the trading hours. So, what do you need? You need a demat account if you want to purchase a ETF. Third point, there are 4 kinds of ETFs available in India. Equity ETFs, which invest in shares. Debt ETFs, which invests in debt securities like government securities or bond market. Third, gold ETFs. Fourth, silver ETFs. Now, silver ETF is the new addition. SEBI gave a nod for silver ETFs only in the September of 2021. ICICI Prudential is the first mutual fund house to come up with a NFO, new fund offer, for a silver ETF in Jan 2022. So, silver ETFs are comparatively new in India. Fourth point, you should look out for the deductions from the ETF. In the sense, brokerage costs. Since you are going to buy and sell ETFs on a stock, like shares on a stock exchange, there is a brokerage cost involved. Look out for that. Second, Securities Transaction Tax, STT. Now, this tax was introduced by Government of India in 2004 and it varies anywhere between 0.025% to 0.25%. Now, this variation depends on the kind of securities that are being traded and whether it is a sale or a purchase transaction. Third, you should look out for the expense ratio, the administrative costs or the corporate expenses involved in running a particular mutual fund house. Fifth, and the most important point that you should check before investing in an ETF is the tracking error of that particular fund. Now, what is the tracking error? It is basically a difference between the returns that your fund is giving you and the returns of the underlying index which it is tracking. Now, for example, if your ETF say is giving you a return of 10% and you have invested say in a Nifty ETF. So your returns are 10%, your ETF returns are 10%, whereas say the Nifty is giving a return of say 12%. So what is this difference? This difference of 2% is called the tracking error. Now, since ETFs are passively managed, what normally is looked out for is that they replicate the index that they are tracking. So, if you are investing in a Nifty ETF, ideally the returns of that ETF should match with the returns of Nifty. But if that is not happening, then a tracking error arises. Now, this error gives you a fair amount of insight as to the performance of the ETF. So, you should look out for the tracking error figures before you decide on investing in any ETFs. So just to sum up once again, the 5 points that you should know before you decide to invest in any ETF. ETFs track an underlying index. ETFs can be traded just like shares within the trading hours of the stock exchange. ETFs are of four kinds in India: equity, debt, gold, silver. There are some deductions in ETF that you should know about. Brokerage cost. Why? Because you're going to buy and sell ETF units just like shares. STT, Securities Transaction Cost, Tax, and expense ratio of the fund. And the fifth and the most important point that you should check is tracking error. Look out for all these points and then decide which ETF you want to invest in. Yes, and I forgot to add, you need to have a demat account if you are planning to invest in the ETF. So tick all these points and then go ahead and do your investment. Happy investing. Lastly, if you have any queries regarding mutual funds or ETFs, feel free to comment below this video. Also, like and share my YouTube channel for more such informative videos on personal finance and investment products. Thank you.